Well, let's get to our first discussion today. Nigeria's capital importation in the third quarter of 2024 saw a significant decline of 51.9%, totaling $1.25 billion to $2.60 billion that recorded in the preceding quarter of the year. When compared to the same period in 2023, the Q3 of 2024 capital importation shows a robust 91.35% increase from $654 million, reflecting a positive year-on-year trend despite the quarterly slump. This is according to the latest capital importation report released on Friday by the National Bureau of Statistics. The report reads, in Q3 2024, total capital importation into Nigeria stood at $1.25 million, higher than $654.6 million recorded in Q3 of 2023, indicating an increase of 91.35%. In comparison, in the preceding quarter, capital importation declined by 51.9% from $2.6 million in Q2 2024. Well, interesting figures here. Let's talk to Mr. Ayodeji, Dr. Ayodeji Ebo. He's the Managing Director, Chief Business Officer, Optimus by AfriInvest. Thank you so much. It's good to have you on the program.
Yeah, good afternoon. Great to be here.
I think it's good to start with your overview of this figure. What is your understanding of this decline, one way or the other, that we see in these figures from the NBS?
Okay, thanks. When we speak to the capital importation data, it looks at the total amount of FX that has come in through the country, both from the foreign direct investment, foreign portfolio investment, and others that have been classified as orders into the economy. And when you want to look at, based on even the numbers you reeled out, on a net basis, so you look at capital importation down on a quarter-on-quarter basis to about $1.25 billion. And yet, while it looks very significant in terms of improvement on a year-on-year basis, last year, we know, given some of the challenges in the economy, what we got in Q3 was around Q3 2023 was just around $654 million. But when you break down that $1.25 billion, so out of it, 71% of that is foreign portfolio investment. And when you further look at the foreign portfolio investment, see that money market investment accounts for a major part, which, yes, we say hot money, so they are coming to just take advantage of the high interest rate environment. But on a quarter-on-quarter basis, it means that beyond, there was significant interest in Q2.
Dr. Ebo, allow me to interject you so that we get back live on all our platforms. Let's take this break when we
examine the oddities and challenges to economic development, as well as issues yearning for government intervention.
We're glad to have you back. We're talking capital importation in Nigeria, and I have Dr. Ayodeji Ebo, who's been helping break down. Yes, Doctor, before we went on that break, you were talking about portfolio investments and all of that that came in compared to, of course, we call it hot money, like you said. Take it away from there.
Okay, thank you. So we're trying to look at so from the $1.25 billion that was received in Q3, foreign portfolio investment accounts for about 71% of that. But the other major part, which should be of interest to us, is the foreign direct investment. So apart from which is classified as orders, which mostly is always loans. So you would see, because of the FX environment, a lot of companies that have subsidiaries, they have foreign affiliation or have foreign office. For most of them, they have had to also support their firm with loans from their head office. So that accounts for about 19% of total capital importation, while the foreign direct investment, which is that major part that should help support the economy, should help add value and create a bit of stability, that came in just at 8%. And when you see that, that's just about $103 million, which is really very mega. So that is where our focus should be. What we need more, why would the foreign portfolio investment help to create the liquidity, just like cash flow? It comes in, create the liquidity, people, it comes in and out. The one that will stay and will add more value to our economy is the foreign direct investment. And it's almost at all-time low when you check it on a quarter-on-quarter basis. So there's a need to pay more attention to see how should we attract foreign direct investment. It means people setting up companies here in Nigeria, taking equity in companies, which is for a long term, not just buying the shares of those companies. These are the sectors, or this is the parts that we take, that will create the employment that we desire to reduce unemployment. And as we reduce unemployment, it will also impact on insecurity, and productivity would also improve. So I would say in summary that there's a need to pay attention to that particular area beyond just the foreign portfolio investment.
Indeed, everyone is worried. And what sort of policies do we need to institute, or are we not instituting at this time, that still is not making us so attractive that we can get the needed FDIs? At a time, many will say that investors' eyes still seems to be on Nigeria. Let's look at a Euro bond that was floated sometime, and oversubscription. Some will say that this confidence is gradually coming. But what more policies, what conversations should we be having to make sure that we get it right?
Okay, thanks. And I'm sure that also the new Minister for Trade and Investment, this is also going to be a core job, which she's also working to ensure that in terms of our perception or also attracting investment into the country, we're able to achieve that. But one of the quick wins is no business or no economy can thrive when insecurity is very high. So we need to ensure that we tame it to the barest minimum level. You know, beyond the kidnapping, you have the herdsmen issue, you have several armed robbery issues, crises that are all going on within the country. So this sends a very negative signal. It sends negative signal to foreign investors. So if we're able to take care and bring down insecurity, then we may also want to look at the laws around the enforcement of contracts. So what we've seen when you discuss with some foreign investors is that in Nigeria, if you get a certain approval, whether it's government approval to deliver a project, if you are unable to complete that project within the tenure of that particular government, a new government may come and jettison that project and start afresh. So that means that there's no stability in terms of policy and enforcement of contracts. If we have said we are going to tow this particular road for 10 years, then if there's a partnership, PPP around it, then we need to honor that agreement to send positive signal, not reverse the agreement. It creates more negative impact relative to the overall positive impact we think that may, when we reverse that. So it's important that we look at that. Thirdly is that once they see that the ease of doing business, the policy around it have improved significantly, Nigeria is saddled, has a lot of raw materials that we can add value rather than we just exporting. Even from some of the commodities that we export just raw. So if we are able to add value, begin to see that they can add value, and those products we consume them, the finished products we consume them in Nigeria, I'm positive that there will be a lot of foreign investors that will be willing to come and set up, we call it nearest to market, set up their factory, add value to those goods here, and sell those goods also in Nigeria. You will see a few of the companies that are also exiting the country also does not send positive signal. These are some of the things for new entrants that they would review when they carry out their visibility studies to see why are some of these companies winding down and leaving the country, or whether is investors selling their shares and selling to new investors. These are some of the studies that will be carried out before we begin to get new investors in the country.
The banking sector received the largest, or can be identified as the largest recipients of funds from these transactions. And also, more came in from the United Kingdom, followed by South Africa, before we get to United States of America. How would you also react to these indices in these figures?
Okay, thanks. So we've continued to see that UK has been contributing more. And when you also break it down, you will see that more are also coming to foreign portfolio investment. They understand the terrain. The interest rate environment there is also very low. And you know that interest rate is currently being reduced over time. The Bank of England has reduced the interest rate by almost, I think, about 3 times this year alone. So with that, it will be creating new opportunities, but beyond high interest rate environment, what potential investors also look at is the FX policy, the management. How stable will the FX be? Because once you expect that there will be a depreciation, foreign investors will be mindful for them coming in at a particular level, and as the naira depreciates further, whatever gains that they think they can make even from their investments, that can be eroded. But we think that that is improving if we check based on the liquidity, based on some of the policies, the IFEM's new system that has also been introduced, the P-match system on the Bloomberg that has been introduced, will create a bit of feasibility, and we may begin to see more foreign portfolio investment in the country. But, you know, like I mentioned, we need these foreign portfolio investments, right, to create liquidity. They are short-term monies, while we work on the long-term funding, which is the foreign direct investment.
Interesting stuff now. So let's move a step forward. Production and manufacturing sector didn't do so very well. I don't know what you think is responsible for that. And states that also perform, the focus, obviously, Lagos, Abuja, Kaduna, Enugu, and I think Ekiti states. I think more needs to be done by the Nigerian Investment Promotion Commission or something. How can these states attract more investments? How will they make sure they let foreign investors know that they are opened for trade and investment?
Okay, thanks. I think the first thing is policy. Security. You need to also ensure that there's adequate security. Secondly, they need to have very strong blueprints and projects that are attractive, that foreign investors will be happy to partner with them. So when you check for some of those states, the governor must have come up with projects that looks attractive and would also have more impact on the populace. And that's why you see, for beyond Lagos and Abuja, you know, for most of the head offices of most of these companies are situated in those locations. But when we look beyond Lagos, Abuja, those other states that have attracted a little bit of inflows are based on the projects and initiatives that they've set up. So I think we need to evolve to an era where states depend less back allocation. They need to begin to come up with policies that will make their states more attractive. So you would imagine that countries where, I would say states, where you know that you would have 24 hours power. So if you are able to generate your power, and factories will begin to migrate or move towards that particular area. So it's some of those states can begin to come up with unique solution. We know we have power issues in Nigeria, and with the new policy, I think that's the national regulation, NERC policy around allowing states for them to generate their power. So these are some of the things that can attract investment. In terms of taxes, what's the tax benefits that governors are creating for companies to come to their states to situate their companies? These are some of the things that will even attract foreign investors into those particular location. Infrastructure, these are the things that should be looked at to attract foreign direct investment to those states.
So finally, before I let you go, you talked about the much discussed or topical tax reform being instituted by government and the back and forth. I'd like to also know your reaction to this while we wrap up this conversation. And what is your outlook talking about capital importation for the next quarter?
Okay, thank you. So firstly, I think that the reform around the tax is long overdue. We can't continue to use or to rely on policies that have been formed in the last 30, 40 years. Dynamic of businesses have changed. So it is very positive. It's not going to be perfect at once. There will be different views around that, but there's a need to bring it to current happenings or make it more contemporary, which is very, very positive, very necessary. Secondly, on the outlook, we think that there will be slight improvement more compared to Q3, given some of the new policies around like the B-match system around FX that will attract investors that will attract more investors, especially through the FPI window relative to even the FDI. But the FDI, there's a lot of work that needs to be done around that. Thank you.
Amos, thank you so much for your time. Interesting conversation. Dr. Ayodeji Ebo, he's the Managing Director and Chief Business Officer of Optimus by AfriInvest. Do enjoy the rest of your day and thank you for your time.
Great to be here. Thanks for having me.
Well, still to come on the show, we'll shift to